Bookkeeping is the financial foundation of any business. Yet, many entrepreneurs unintentionally make mistakes that cost them time, money, and opportunities. This video covers 7 common bookkeeping mistakes business owners make, provides real-world examples, and to help avoid them. Mistake number 1. Mixing personal and business finances. Mixing personal and business finances causes confusion, complicates tax reporting, and can trigger audits. For example, a boutique owner used a personal credit card for business inventory. At tax time, sorting transactions led to missed deductions and errors. How to avoid it? Open a dedicated business bank account and credit card. Pay yourself a set salary or draw. Use accounting software to track only business transactions. Mistake number 2, not keeping receipts and records. Without receipts, deductions may be denied and audits become stressful. For example, a contractor lost thousands in tax deductions because they couldn't provide receipts for fuel and equipment expenses. How to avoid it? Use apps like Expensify or HubDoc. Store digital receipts in the cloud. Reconcile receipts monthly. Mistake number 3, DIY bookkeeping without knowledge. DIY bookkeeping often leads to errors, poor compliance, and financial blind spots. For example, a startup used spreadsheets and forgot to track sales tax properly, resulting in penalties. How to avoid it? Use QuickBooks, Xero, or Wave. Learn basic bookkeeping principles. Consider outsourcing bookkeeping. Mistake number 4, not reconciling bank accounts regularly. Reconciliation detects errors, fraud, and duplicate charges. Skipping it can create major financial discrepancies. For example, an e-commerce store overpaid a supplier and didn't discover for months because they hadn't reconciled accounts. How to avoid it? Reconcile bank accounts monthly or weekly. Investigate all discrepancies immediately. Automate reconciliation where possible. Mistake number 5, ignoring accounts receivable. Unpaid invoices reduce cash flow and create financial stress. For example, a consultancy ignored late invoices and had to write off $10,000 in bad debt. How to avoid it? Set clear payment terms. Send automated reminders. Review aging invoices weekly. Mistake number 6, failing to categorize expenses properly. Improper categorization skews financial reports and can result in incorrect tax filings. For example, a restaurant owner categorized equipment purchases as expenses instead of assets, overstating costs and lowering profit. How to avoid it? Use accounting software with default categories. Get guidance from an accountant. Review categories quarterly. Mistake number 7, not planning for taxes. Failing to set aside money for taxes causes cash flow issues and penalties. For example, a freelancer spent all business earnings without saving for taxes, resulting in IRS penalties and debt. How to avoid it? Set aside a percentage of income for taxes. Make quarterly estimated tax payments. Consult a tax professional. In conclusion, bookkeeping mistakes are avoidable with the right processes and tools. Use these tips and checklists to stay organized, remain compliant, and focus on growing your business.